The Fed is in a very difficult situation right now, and the latest move from Jerome Powell may have just lit the fuse for the final countdown and major bull market rally to end the year off. Let's have a listen to his latest statement at the FOMC meeting today.
We do. We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Now, as Jerome Powell stated, their mandates over at the Fed are two things: inflation and employment. And inflation has been at the core CPI level about 1% above their 2% mandate since it started climbing to its all-time high of 9% from 2021 into 2022. They raised interest rates and then inflation started declining, but has struggled, at least at the core CPI level, to get back down to 2%. However, from a real inflation standpoint, inflation did come under 2%, currently trending up to about 2.3%. However, many Americans have not seen the effects of lower inflation, consistently paying more for groceries, consistently seeing stickier prices, consistently seeing higher prices at the gas pump. Everything in life has remained unreasonably high, and that would include the housing market. So as inflation has remained higher than normal, now the Fed has had their hand forced to lower interest rates for the very first time since last year by 25 basis points, and the market got exactly what it expected, which was 425 basis points or 4.25%. Anything more might have spooked the market, even though maybe the market needs lower interest rates now more than ever, because that would be a signal that the Fed sees something as seriously wrong. And what makes matters even worse is the fact that the Fed, for the first time in a very long time, is highly divided. This is unprecedented. Typically, the Fed moves in union, the majority of the Fed members saying, hey, we need to keep interest rates high, or we need to lower them. And they're all relatively in agreement. However, 9 out of the 19 Fed members saw the need for a 50 basis point rate cut, while 6 out of the 19 believe 0 additional rate cuts are needed this year. And 1 even thinks that they are going to hike by the end of the year. So in this video, I'll be covering this division over at the Fed and how some of the smartest investors not only view it, but are prepping into the upcoming months, and also what this will mean for the price of XRP and crypto moving forward, so you can plan and prep into it. And before we dive in, if you currently have an IRA, a Roth IRA, or are looking to start a premium custody account, a PCA, where you can buy the majority of the cryptos that you want inside of this tax advantaged account, and we're talking cryptos that are simply not available on the majority majority of platforms. Aside from your majors like Bitcoin, Ethereum, XRP, and Solana, we have things like Chainlink, Sui, HBAR, meme coins like SHIB, World Liberty Financial, Pepe, Ondo, real world assets, AI companies like BitTensor, and the list goes on. All of these things can be purchased inside of that Roth IRA through iTrust Capital. And so if you already have one, you can actually roll it over to iTrust Capital, which is not only very safe, but 100% regulated inside of the United States, has extremely low fees, no monthlies, no annuals, only a 1% on transaction fees buying and selling crypto. And the coolest part is they do have a team here in the United States. If you're ever needing customer support, it's no high pressure sales pitch. At the end of the day, they just want you to keep your account with them, which makes total sense. But they don't even keep your assets on their balance sheet, which means they're not using it to leverage, to lend, or to borrow. They're non-commissioned and they don't do sales. They're simply here to help you, which is awesome. And when you sign up through that link below in our description at itrustcapital.com/bullrunners, sign up and use the promo code BULLRUN9, you'll get a $100 funding bonus. So if you believe the future of the financial world is crypto, and many of these cryptos are going to outperform the majority of stocks and the S&P 500, then the best place that you can have your tax-advantaged Roth IRA hosted is through something like iTrust Capital. And without further ado, as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, my friend. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PauliDeFi. The only thing that's honestly worth talking about, at least today, is the fact that the Fed did lower interest rates for the first time since December of 2024 by literally only 0.25% or 25 basis points, which was totally expected considering the weakness in the labor market, which again is one of the Fed's dual mandates, protecting that job market. And everyone's been kind of worried about it, but in all fairness, if they would have lowered by 50 basis points like some of the Fed governors wanted, like Donald Trump and a lot of politicians wanted, I believe that the market would have actually sold off pretty hard, because that would have been a strong indicator that there's far more weakness in the economy than previously expected. So sticking with 0.25 basis point or expectations was a very smart move by the Fed. And a narrow majority of officials penciled in at least 2 more additional rate cuts this year, implying consecutive moves at the Fed's 2 remaining meetings in October and December, which, by the way, if expectations are again 25 basis points or 50 basis points and those are met, then I don't think it'll cause for any panic or fear in the markets, although it is an indicator that we are experiencing more weakness at an economic level, especially with markets at all-time highs. So the real question is, what's going to happen with the stock market and with crypto? We're going to cover that here shortly. But recent declines in the growth rate for both the number of people looking for jobs and those gaining employment have certainly gotten everyone's attention. And that's what we just heard from Jerome Powell. And we're starting to see a lot of the Fed board governors deviate in terms of their positions, which means there's true division and ultimately nobody knows what to do next, but everyone's got an opinion. Sounds like the world we live in. Officials have been reluctant to lower rates until now because the labor market had looked firmer and inflation had been stubborn. And the only reason they would keep interest rates high is to combat inflation. But inflation has remained really high, while the labor market was still doing pretty well. An unemployment rate sitting at about 4.2% for quite some time, moving sideways. But at the end of the day, now that this thing is starting to crack, there is no risk-free path. So they're going to have to lower interest rates to deal with that stubborn employment economy. And at the end of the day, the Fed always does too little, too late. In reality, this whole issue could have been resolved if instead of waiting for inflation to rise to 9.1% before dealing with it, they should have increased interest rates well into all of that money printing that we were doing, because that was obviously going to cause inflation. But instead, they wait for the data and the reports months and months later and say, we're using that data in order to make our decisions. And it's really just to protect themselves and their positions, instead of being bold and knowing basic economics economics. The more money you print, the more you're going to experience inflation. However, at this moment in time, they are uneasy about making bolder commitments to lower rates at a time when stocks are hitting new records and new tax cuts might provide stimulus in months ahead. Now, I believe, just based on what the market is currently doing, that we are getting a signal of what comes next. The markets didn't sell off into this news of a rate cut. More often than not, we mark local tops in that situation. But because the stock market has been rallying and at new all-time highs, most cryptos have hit new all-time highs, or at least the majors, that they will continue to do so into the next few rate cuts and potentially see some blow-off tops before 2026. Now, I'm not saying this bull market's over by 2026. We really don't know. This might be the first super mega cycle that we've ever experienced where crypto truly decouples from the stock market, especially a Bitcoin, which will act like a hedge to inflation. But for the time being, the crypto market trades very much like a risk on asset class, still very volatile, and so nobody's really sure. And if anyone tells you they know, they are lying. Nobody knows. So we just have to take this information day by day and then make our judgments based on strength or weakness in the markets. The markets and prices are actually the best indicator of what's really going on, not people's opinions, not articles, not really smart talking heads all over X or YouTube. The market, the price should tell you more about what comes next. And we will dive into that very shortly. But what's interesting about this particular Fed meeting and all of the drama probably going on behind closed doors at one of the most powerful banks in the world is the fact that this meeting was a mess, according to Jim Bianco. And we're going to look at a dot plot here in a second. One member of the FOMC thinks the Fed is going to hike rates this year and thinks it's going to increase interest rates, which would be absolutely ludicrous. Another, Stephen Mirin, thinks it's going to cut 1.25% this year, 5 cuts over 2 meetings. And see, the spread of dots above is the fact that the FOMC shows little to no agreement on what they should do. In other words, this is one of the most divided Feds in history. We're looking at 5 members expecting no more cuts this year, 2 members expecting 1 cut this year, and at 9 expecting 2 cuts this year. Yet nobody knows who this is, although they are expecting it to be Stephen Mirin. Either way, it looks very likely we're going to get more rate cuts, which will be bullish in the short term, maybe not so much in the long term. But what is bullish long term is the fact that we officially have the Genius Act passed. Now we're going to get clarity, and we even have a post from Monica Long, which is the president over at Ripple, talking about this good news. And here's a photo of her over in DC and her excitement to hear outreach from lawmakers to the industry to listen to practical applications. And again, there's probably no team better in crypto to know about what's practical when it comes to laws and regulations in the United States that not only protect consumers and investors, but also allow companies the freedom for innovation. And that's exactly what she says, to foster innovation and flex with time. Thank you to the leadership, Tim Scott and Senator Loomis, during today's roundtable in DC. So it looks like she was there for the roundtable. Again, having Ripple or teams in crypto over in these meetings is going to provide a lot of clarity to these lawmakers in order to provide the right laws moving forward that will truly benefit the crypto market and ultimately in the long term benefit our crypto portfolios and gains. So let's dive into the XRP chart and see what's going on over here and what the market actually thinks about this very first rate cut. So again, we've covered the fact that we've been in a descending wedge or triangle for quite some time. We saw our lows come in right here at about 275 with a wick through just barely back in September 1st. And now we are starting to see the start to a new uptrend. So you can see that our prior range high came in right here at about $3.12. And I said, if we can break above that $3.12 level, things are going to be looking pretty dang good, to which we did. We put in a new high. So although we sold off right there, you can see that we've seen a bit of resistance. Our new highs on 1 wick and 2 wicks are very promising, much less the fact that we've also seen a lot of support at that $3 level. We saw a bullish engulfing candle on September 16th, and September 17th, we're seeing follow through. So as we speak, with this Fed rate rate cut, it looks like the markets are handling it quite well. We're not seeing volatility or sell pressure to the downside. People are not viewing it as a very negative thing. It's actually being taken as a very positive thing. And even volume increased on that day. The prior day right here, September 17th. Even though today is that day, I go based on a UTC time zone. In other words, that's universal time because crypto trades 24/7. When you combine that with that 10 and 20 EMA, you're seeing we're being supported consistently at the 20 EMA. The 10 EMA has crossed over, price is above the 10 EMA. And so it's highly likely we get a continuation now of this trend from that local low where we have a major confluence of all of these scenarios and situations. And we're back above that $3.07 range. So I thoroughly expect XRP within the week to likely pump to at least $3.35. And this would be the start to a new trend where we could potentially break for some new all-time highs, especially into the end of the year where we're getting more rate cuts, even though we might be nearing the end of this bull market cycle from the stock market perspective. And even though we might experience a 2026 that is really bullish, at the end of the day, the end of the year, October, November, December are always really bullish months for crypto. And so with XRP maintaining this very long, strong range above 270 to $3, going all the way back to the prior all-time high on a weekly time frame. Think about that for a second. In 2017, notice we sold off on the candle closes right here at 270. Well, now we are holding above the range for the very first time and for quite a period of time. When you look at that all-time high come in July, we're sitting above this range for 60 plus days. And this thing has now officially bottomed out right down here at the 20 EMA. Again, another confluence on a weekly time frame and back above the 10 EMA. So I do expect new all-time highs, and my first major all-time high target will be $5. First, we might experience some resistance in these key levels that we just talked about, but that $5 range looks like XRP is gunning for it. So again, dips right now are for buying, and that is not financial advice, my friend. That's just what I'm seeing on the chart and keeping it very simple for the sake of this video. But if you want more technical analysis, more in depth, you want to learn everything there is to know about understanding candlesticks, chart patterns, looking at charts, what indicators to use, then join Altcoin Pro University by clicking altcoinpro.com down below, or any one of those links, or just going to altcoinpro.com for your one-stop shop for crypto education, tools, training, resources. And every single Tuesday, I host a live technical analysis Tuesday call. The next one's on the 23rd, where I answer questions live for our members. And many of our students are learning so much through these calls. For example, one of our members said they miss the call every single week because they don't get off of work in time, but they look forward to the recordings and that they are learning a lot and thank me for what I'm doing on these calls. Now, that's not for me to brag. That's for me to prove to you that we have loads of students that are truly benefiting from the stuff that they get on these calls. So much so that we literally have one of, if not the highest retention in all of school, which is a major platform for communities. And we've consistently maintained almost 1,000 members for the year because most of these members are actually earning while they're learning, which pays for the course membership in and of itself. When we talk about if we could teach you how to make more than $97 a month, everything else in here is a smooth ride. And many of you might have access to more capital than that. And if so, that is great. But we're consistently adding to this platform and library when it comes to teaching you how to take advantage of DeFi yields in a quick win farm where you can earn enough just to pay for the membership, or any one of our resources and guides which we're consistently updating and on top of, like when to buy, when to sell, managing your losses, risk management, your altcoins are down, what should you do, how to take advantage of DeFi, whether it's on Solana or XRP, tax strategies and guides, technical analysis, dollar cost averaging, and the list goes on. And if that wasn't enough, we also have tons of community members who are consistently on top of the ball and share all sorts of alpha and altcoin plays alongside our pros and experts. So head on over to altcoinpro.com to check it out. You have nothing to lose and everything to gain. If in 14 days you're not happy or satisfied with this platform, then go ahead and ask for a refund. But we're confident that this is the best that's ever been offered in all of crypto, and many of our students agree. So thanks so much for watching this video, my friend. I appreciate your time. Be sure to subscribe to the channel, and I will see you in the next video. Goodbye.